Good evening, all. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for the evening, as we're here now on March 1st, 2023, about 6:37 a.m. Central Time. Interesting day today. Big rally in the gold, giving up tonight a little bit of that. Is silver going to lose its embedded reading? That'll be important. It had a bearish one. If it loses, it'll bounce. Stock market tonight starting off on a strong note. But remember, we're in that phase now. You start off strong, you end up weak. It's the flip-flop of what we were doing December into January and most of January. You flipped it now where the bears have control of the market at this point in time. We're getting a bit of a bounce in the bonds and the notes. I find that interesting too. Bitcoin trying to give more of a rally. I was telling my clients today you can't be short Ethereum any longer, and we walked away from that trade. So we'll see what goes on. The dollar, well, we'll see if it's going to have any life to it. Right now, most currencies are up against it. It finished down about 39 points, but well off the low of the day, 40 points off the low. So it was getting beat up rather hard, but it came back a little bit. Now, before I go in and explain all the charts, I want to remind you that tomorrow we have the live webinar. I'll open it at 12:15 p.m. I'll start talking at 12:30, and I'll be over at 12:50. It's fast. Your invites have been sent out. There'll be no more sent out. We're done with that. If you'd like to join and you didn't get the invite, just move your cursor up to the top right here. You'll see an icon during the performance that I'm giving. Yes, it's a performance. And click on that, fill out the form. Now, if you have anything in the stock, spider, ETF market, please write me a question on that. When you get back your user ID and password, that's how you do that. And we are very full. Okay, that's why I don't have to keep pushing it. So let's talk about where we're at then in the marketplace and where we go with all this. So in the gold market, you fell back to the support at the 18-day average and you got to bounce. It's exactly to the letter. I mean, if I had to engineer a line to do something and to sell a charting course, this is it. Market corrected, hit it. Now the question is, does it stay above it? And that was the correction and it's ready to move up? Or does it slip back under and close back under that number? Okay. When we take a look at the chart action, you've had a heck of a break and all of a sudden you're getting lift off the lows. You'll see where those lows came in. You have lower highs, lower low, and they came in against the 100-day average, just missing the 200. Doesn't matter if you hit the 2 and the 100, no. It's ideal that you hit a Bollinger Band and you hit the Bollinger Band area. No, it was the 100 that turned the market. And that's fine. Are we out of the downtrend? Well, you need to close over the 18-day average to say that. So at this point, it's been a rally in a bear market off of key support, and it's got to prove itself. It hasn't done it. What did happen is back here. And if we step back together, right to this day, this is Tuesday. Remember, today that I'm talking to you is Wednesday. You still had your embedded readings. Boom, you lose it. This screams to me, if I'm your broker, hey, Bill, hey, Martha, let's not be in that market on the short side. It looks as though the momentum is lost. The momentum is gone on the slow stochastic. You'd have to close back under 21. Yes, I do think it's probably going to have the 18-day average in its target, but it needs to close over it to prove it's anything more than a bear market rally. Phone call over. Where are we then in the market? Well, if you and I come right here, you're right like this. Am I looking for that to be hit? You can count on it. That's what I'm looking for in the chart, for that to be hit. Momentum lost. Okay. So now we come to the gold-silver ratio. It's wobbling. It hasn't said that it's over. You know, it's been a lot higher than this, as you can see over time. Got to wait and see what it wants to do. But do you disagree that ever since this ratio got here at the beginning of the year, over the red line, the 18-day average, silver has been losing value. The higher you go, the more ounces of silver you need to get 1 ounce of gold. That's what's been going on. And the silver chart had been miserable. Well, guess what happened on the way to the forum today? If you look at tonight's action, the word is tonight's action, you got a 24 reading. But where were you on the close of business? 2075 isn't over 21. So you're right at the point of inflection. where if the market loses this reading over 21, the odds favor the first objective is right in front of you, but if it doesn't when the market's over the 200, then you open up for the 18-day average of closes. Watch. There's the first part of resistance, but you haven't lost the embedded reading. You're here. If you were to close just like this, the objective's not the 18. It's the 200-day. It's the closest main moving average. I teach that in the Enhanced Bollinger Band course and why that works, stock market, ETFs, the futures, a chart's a chart. The concept is the same. In the copper market, it is all about sideways action with China. China came out today and they have growth numbers that are looking better and better. They claim they have come out of the COVID, done, finished. The people are either they've had the COVID, they've been vaccinated, and the population is back at work and humming. Now, next week, we get the People's Party Congress, a big one, and we'll hear all kinds of things there. So probably you don't want to be short the material market. You never know what they're going to say at these meetings. So just word of caution. They don't go into them and say it's going to be terrible. We're not going to buy anything. We're going to not help the economy along. They're not going to say that. That doesn't mean they have to come out rah, rah, rah. They realize that the world economy has slowed down tremendously. Everybody's talking of central banks slowing their economies down to fight inflation. It is not the time you're probably going to see that we in Europe just put in massive orders to buy Chinese goods. They probably have turned more inward to help their economy. When we look at the platinum market, you've got higher lows, higher highs, fighting to stay over the 18-day average. Is the market in an uptrend? It absolutely is. When did it begin? Let me walk you back on this. Not today, which is right here. What happened yesterday? Yesterday was the first day that the market closed right on the 18-day average. And now if you're taking out those highs, if you're taking out the highs right here, then that sets it off. Where could the market be going? It could be up here. Does it have to go to the 100 and the Bollinger Band? No. Here's why. What's more likely is look at the Bollinger Bands. They're starting to go steady on you. Markets that start doing that, they're saying to you, I need some time. What does that mean? It means that I want to look at the market and maybe you're just going to spin here as you've come out of this big downtrend and the market has to digest what next. Again, another material that maybe China is going to be in play with. In the palladium market, here too, did we have number one an embedded reading? So we come in order to have it, you got to have all these numbers staying under 20. Well, you have them there. You have them there. Got them there. As far as I'm concerned, it's embedded. The first time the red closes over 21, I think you're saying the price and the 18-day average are going to make a run at each other. You tell me what's going on. I know you're going to say, well, it didn't do it. It just happened. I'm wrong if you get under that number, and wherever the 18-day average, that's what I'm looking for. In the dollar index, you just lost the embedded reading here with the closes under 79. Price and the 18-day average to come together. So the metals, if the dollar falls, gets a bid automatically. It still means that we're at the beginning of a year. We're going to get jobs reports. We're going to get all kinds of numbers coming out, which could raise interest rates even further. Does it boost the dollar or hurt the dollar? You might be at the inflection point, and you've got to think this through, where the raising of rates, instead of giving the currency a bid, now people say it's going to raise it so much it's got to hurt the economy. I'm better off buying some of the other economies, such as the euro, where yes, they're going to raise rates, but not as much to slow their economy down as to tame the inflation via what the U.S. is going to do. You have to walk a fine line, but that's where I think you're at right now. Want to remind you again, if you're going to join me at the webinar tomorrow, just move your cursor up here, give it a click, sign up, and I'll see you then at 12:15 tomorrow. I'll open it up, and I'll be speaking at 12:30. You have a great day.